He warned us once, we ignored him, he warned us again. The world laughed. But now, in 2025, his newest prediction is sending shockwaves through every corner of global finance. This is the story of the man who predicted every major market crash, long before anyone believed him, and why his latest warning might be the most terrifying one yet. For decades, he remained in the shadows. Not a TV celebrity, not a Twitter personality, just a quiet economist who studied patterns nobody else bothered to question. His name rarely appears in headlines, but whenever he speaks, markets tremble. Because every time he issued a warning, disaster followed. In 1999, he wrote a paper arguing that tech valuations had broken away from reality. Months later, the dot-com bubble exploded. In 2007, he noted something unnaturally fragile in mortgage-backed securities. People mocked him. 1 year later, the global financial crisis wiped out $17 trillion. In 2019, he claimed that central banks were pumping dangerous, irreversible pressure into the world economy. And then, 2020 happened. Each time, he was early. Each time, he was right. But what makes 2025 different is the tone. Because this time, he isn't just warning of a crash. He's warning of a structural fracture, something deeper, more systemic, and far harder to stop once it begins. He says the global economy is entering what he calls the compression zone, a period where inflation, debt, geopolitical tension, and technological disruption collide in a way we've never seen before. And according to him, this collision will break something fundamental. Think about it. Governments have borrowed more money in the last 5 years than they did in the previous 20. Corporations are holding record levels of debt. Consumers are stretched thin, surviving on credit, not income. At the same time, AI is replacing jobs faster than new industries can absorb the workforce. Meanwhile, geopolitical rivalries are freezing global trade. He says the world is now like a pressure cooker with no release valve. The question isn't if something snaps, but what snaps first. He believes the first domino will fall in the bond market, an event that will make the 2008 crisis look small. Because when debt becomes too heavy, even a tiny shift in interest rates can unleash chaos. Pension funds crack, banks lose liquidity, governments scramble for cash, and investors flee to safety, triggering panic across every asset class, from stocks to crypto. And here's the part that chills analysts the most. He claims the fuse has already been lit. Not next year, not next quarter, now. Is he being dramatic, or is he seeing a pattern the rest of us refuse to face? History suggests one thing. When he raises his voice, it pays to listen. Because every warning he gave before was just a tremor, but the warning he's giving now sounds like the beginning of an earthquake. And the real question is, are we prepared for what comes after the ground breaks?